Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to the daily market analysis show, Markets Tomorrow. This is analysis for February 18th, Friday 2022. And in the markets, we saw resistance once again, right? The banks underperformed and it was a volatile, flat week, the expiry day that happened. Let's see what exactly was in, right? So it's a pre-market analysis for February 18th, Friday, tomorrow, 2022, and we'll be doing that based on all these parameters that you see. It has max symbols, wrap-ups, and data analysis, and charts reading. So here are the charts. What is the candle pattern that you see? Is bearish candle, right? And if you look at it, so it's more or less the same place. It was a flat day. BANKNIFTY, it was even more bearish, right? We have a bigger candle on 1% lost. So how much was lost? 18 points only. It's a flat, very flattish close for Nifty, and a 1% down, 422 points on BANKNIFTY. It maintained that it was some kind of an expiry play that happened. 7300 level was maintained. 37500 level was maintained on BANKNIFTY. So intraday Nifty had another day of V shape. Look at this. It had a down move, then an up move, and then again down move. So it was similar to what happened yesterday. It was like yesterday it was down move, up move, down move. Today it was down move, up move, down move. Same. It's V and inverter shape V is happened in Nifty. Once again, basically it was consolidating within a 200 point range. It's what happened in the Nifty. Bank Nifty, it was not like that. It could not recover after the first V. The recovery stopped halfway and then it consolidated sometime and then broke down. That's what happened. 15 minutes charts, right? Intraday. So Bollinger Bands is saying more or less the same thing. The thing is, there is stiff resistance at the 20 MA median, and the skews is increased from the top. That means the volatility is likely to reduce, but still it is higher than the Bank Nifty. Bank Nifty is clear consolidation sideways, right, with a relatively lot of low volatility levels, and now it is equal. Right? Both are facing resistance at the 20 MA. So the bull-bear balance has now become more or less equal. The only thing is Bank Nifty is less volatile and showing clear sideways movement. If you also showing clear, but contraction is on the way. So how volatile it will be clear in the next few days. So that's what Bollinger Band says. Support resistance levels, if you see, it's 1750, 400. That band is where resistance is seen. Above that you have 17500, 670, 600, Fibonacci 23 retracement levels, and then above that 17800, 850, and then 18,000 levels. Downside, the support would be 17200 or 7300. That's where it is right now, and then if that goes, it's 17,000 levels, and then 16,800, 16,900 levels is the Fibonacci 38, and below that there are different multiple previous resistance swing low levels, right? So Bank Nifty on the right side, you can see that it is at 37,500 Fibonacci to 23 retracement, where level it's small bounce up happened, and if above that you have actually a resistance. It's not a real support, it's it's a resistance here at 37,800 also. Above that 38 also resistance, 38,500 also resistance, 39,000 also resistance, right? So first support would be 37,550 retracement level, where it is currently now, and if that is gone, then it goes back to 37,000 levels. Then it goes to 36,800 levels, which is the Fibonacci 38 retracement levels. If that also goes, it goes to 36 near 36,000 kind of levels, right? 30 this range. So that's the support and resistance level with Bank Nifty. Nifty we'll already see. Moving on to the momentum divergence, you can see it's sideways momentum today also. Nothing much happened. On the daily charts, Bank Nifty also got sideways momentum. In the medium term, the weekly candles also, both indices have got sideways momentum. No divergence. Divergence was there. It has met the target and then bounced up. So momentum is clear sideways. Trend indicators bearish on both indices, Nifty and Bank Nifty, but the strength of the bearishness is not that great. It's weak. Volatility, if you see, it spiked up 7% above 20 right now. It's 22 level, which is something that we have to be cautious in terms. Implied volatilities of Nifty is 23.87 high. IVP is 93.57 again high. So this is little scary. Getting operator analysis, if you see, this is for the monthly expiry of February, and the data may not be very accurate because active trading may happen from the next expiry only. But right now, just for reference purpose, you can see that the levels are 17,000 and 18,000, where the highest put and the call right now respectively are seen on the Nifty. It's 36,000 and 38,500. Highest put and call rating for the Bank Nifty. 16,500 and 17,500 also has got enough puts, large number of puts and calls that is written. 37,000 also has got good puts. 39,000 also has good call rating. All puts are supports and calls are resistances. And 1.03 is kind of bullish for the Nifty, and 0.78 is not that bullish in the Bank Nifty. So today exactly short build-up is what happened. No doubt about that. I just have a doubt on that. Let me just quickly go and verify the open interest data on Nifty Bank Nifty. Yes, so there is a mistake there. So Bank Nifty today had a long unwinding. It was not a short build up that happened in the Bank Nifty. It's long unwinding is again, bearish only, just like so people who have gone long is thinking of short in Bank Nifty. That's what happened today. So both overall bearishness that is covering around, but that is what not so today's expiry last build up that happened today, not for the Feb 24th open interest for options. That's different, and this is futures we are talking about. So overall there is bearishness that is seen more on the Bank Nifty side as per the open interest. Levels we correlate with the other levels in the charts, support resistance levels that we talked about. Yes, so some saviors are there. We can see HDFC in the Saliver and Reliance performed. These are all the heavyweights. First all were red. Right? All sectors, none of sectors, especially the banks did not perform. Heavyweights we see, you can see red, resistance HDFC Bank. HDFC was performing since last 2 days. It is trying to climb up from the support zone where it has fallen from the top within a channel. And the line is also in a channel couple handle formation. It is also moving slightly up. HDFC and Reliance was performing today. If you see here, HDFC and Reliance perform. That's exactly what the charts are showing. But HDFC Bank not performing. Infi consolidating red. ICICI Bank consolidating red. Not consolidating actually, it went down red. But momentum is sideways for Infosys, ICICI Bank, Reliance, HDFC and HDFC Bank also. All are sideways moving. Even Kodak Bank also was showing red, but it is trying to move upwards towards the resistance zone, and they also have sideways momentum. TCS also is sideways momentum and well within the channel, but it's a red bearish candle that is seen. So overall sideways flattish kind of moves are happening in all except HDFC and Reliance. Right. Sectoral performance also, it was flat or down. IT mode 0.5% down. Metal moved 0.32% down. Auto was flat 0.15. Pharma went down nearly 1%. FMCG went flat 0.3% down. 2% up it says. Reality is flat again. So all of momentum is sideways, and just have to wait for that momentum to catch up at least in the short term before we can pick up stops from the best sectors. Look at this institutional participation that you are seeing of 17 February. Fyers as usual, as it is as any other day how it is. It has sold today also, but it's relatively lesser comparing to the last 1 weeks of selling. 1,240 crores of selling in the cash, but DIA has also bought, but small quantity, less than 1,000 crores of quantity of buying has happened from the DIA. At least they did not sell. That's your market were holding on, consolidating in that range. But DIA is selling is a worry, is a concern for the market. And USD INR is again trying to break out and going up above the 75 levels. Momentum is in the sideways, but as soon as it climbs to the still it is a rupee is at a weakened situation. There is some green also in the dollar and US dollar index also, but sideways momentum. It is consolidating since long time after the breakout that happened at the two previous resistance levels. Crude is still at the crazy levels, but slightly dipped below 90 at least. That's what you see here. Today also was a kind of consolidation. Momentum is bullish still. So it's built within a channel, and the channel top still not reached. There is every scope that it can again spike up. But probably because of the Ukraine crisis cooling off, for crude prices may consolidate for some time before it further moves up probably. Look at this. This is the highlight. The gold is breaking out and trying to break out of the major resistance level starting from 1876 to 19,000 kind of level. So Let's see what happens or not. But it is with great momentum, and that momentum had happened only several months before last November or something, where it did not succeed and then failed. But this time it has climbed above that channel top is broken of the cup and handle, and it is trying to take out this major resistance zone. So gold is shooting up means there is some, probably there could be a chance that the stock markets may have some impact on the negative side. Right? Usually it happens like that. So keep a watch of that. Right? Every other time when the market crashes and the gold is still flat means it should be okay. But when gold is if it is able to break out to make new highs or break out of this resistance zone clearly, then there is something wrong that may happen, is what I look forward to. Now US markets was kind of red yesterday after the green move previous day. So everywhere it is some indecisiveness that you can see. Doji candles, hammer kind of candles, and bearish doji, small body candles. So with sideways momentum. So this is support down here, but here it is on the channel bottom, channel bottom on the S&P 500 and the Nasdaq, but Dow Jones also, so this indecisiveness are not climbing above and the channel towards the top. That is a concern, right? So there is indecisiveness in US market, so keep a good watch on that on the next day, the previous day, tomorrow before the market opening. You would get some indication of that in the SGX, but if it is not a green day, there is high probability that that may reflect in our markets also. Action was only one, Ultratech Cement, that's on the short side. It is a major support zone, that 7,045 kind of levels, and if that goes below the 697 for that major support zone, and the momentum slipping to the bearish below RSI 40, then that may give a shorting opportunity in the Ultratech Cement. Neutral is the short-term view. That's a wrap-up of this video. Right, the neutral view with slight bearish bias. That's because the chart pocket patterns are saying that, support resistance is saying that. Or it is sideways, that's why it's neutral view. Right? But there is some bearish trend that you can see from the chart patterns and resistance levels and all that. So market is basically facing resistance and it's kind of consolidating also with the bearish bias. So this markets is showing some red, as I said before, indicating uncertainty on the different aspects that could include inflation tapering, Ukraine uncertainty, escalation, all of this together combined. This market is showing some resistance or some small, indecisiveness that is still there. Yesterday, that is what until we clearly see an upmove is happening on in the US markets. We cannot say whether the we need to have a close watch on it. Basically, volatility shot up 8% single day. Once again at a 20 above levels already. So 22 kind of level, 22 above level is not good for traders, at least, right? And FIs continue to selling every single day. Today also they are selling. So positive factors would be that it is not breaking down, it is consolidating, and then it is bouncing up from supports and all that. So it is kind of overall sideways movement is what market indicates. That's something positive, at least not breaking down big, right? Now, yeah, so stay away from the trade if it is about 20, it's not, now it's 22, so that's the best approach. But if you want to still participate, then go for heads for interest defined positions for overnight and tight stop loss in the intraday, because V-shaped moves happened today also, yesterday also in Nifty. So that's what happens when the VIX is about 20. You never know when the market reverses or big sell-off profit bookings happens. But this is uncertain. Markets big ways in a highly volatile manner. So that's a view. Neutral with slight bearish bias is what my view is for tomorrow. Hope it helps you to frame your view and your trade plan for the next day. If it helps you some way, consider hitting the like button and share to your friends, colleagues, and everyone. We have very few solutions, and your comments and sharing and subscriptions all helps a lot in motivating us to keep doing this. Thank you. Thanks. Happy trading, happy learning. Bye.